Hello guys. How are you? This is Teacher Polite again with the statement of financial position on the balance sheet. So last time when we met, we were talking about the income statement and we did an example of Socialist income statement. So we want to continue to the balance sheet using that same example. So remember, don't forget to subscribe and to like my videos so that I can continue to bring some more. And also, if we have other things, other topics that you want me to discuss or to bring here, you can just tell me, and then we can just put it in the comments. I will be following. Okay, so let me just say the income statement and the statement of financial position, these are the final accounts or the financial statements that are needed by the business or that show the stakeholders of the business, how the business is performing. The income statement shows us the profits, whereas the statement of financial position shows us the liquidity, the state of the business in terms of its assets and its liabilities. So yeah, that is what we have there. So let's just go to the statement of financial position. So this is the income statement that we did last time when we met. So that is the income statement, and we calculated our profits and we found it to be 14,600. So that is the profit that we got there. Okay. So now what we want to do is to do the statement of financial position. So this is where we are. We have so send the statement of financial position as at 31 March 2009. So let's do that now. Um, so we start with our non-current assets. So saying non-current assets. So we have the column for cost, depreciation, and then we have our net book value. So yes, that's our net book value. Net book value. Okay. So on our fixed assets, let's just check. We have our fixed assets, we have motor vehicles, and then we have premises. So when we're writing these ones, we write them in the order in which, like, based on how long we are going to keep that asset in the business. Like, for example, we're going to keep premises more than we're going to keep motor vehicles. So we start with the premises. So our premises cost 60,000. So let's say premises 60,000. So what is the depreciation? So remember the depreciation we are talking about here, it is accumulated depreciation. So let's check premises, then we have the depreciation here. Proxy for depreciation is 12,000. So we're going to say 12,000 plus the depreciation that we charged in the income statement. So here are the premises and we charged 1,200. So we are going to say 12,000, the 12,000 that we already have plus 1,200. So plus 1,200. So it gives us 18,000. So if we add them, it gives us 18,200. So the difference between the two, if we now then say like 60,000, so we're going to say 60,000 minus 18,200. So get 46,800. Okay, fix my figures here. So 46,800. and then we move on to motor vehicles. So motor vehicles, their cost was 20,000. So let's go and write the cost 20,000. Then we want now the depreciation. So the depreciation, we had 15,000, that is here in the trial balance. Then we also want to add the one that we calculated in the income statement. So remember, in the income statement, we divided it into two. There was the one which was supposed to be charged under the purchases, that is under the carriages. So 2,200, and then 200 plus this one that we charged here, 800, which gives us 1,000. So we are going to say then 15,000. We're going to say 15,000 plus 1,000, and then it gives us 16,000. So the other way you could do it, like, it's just like to say, we were calculating it as 20%. So 20% of 20,000 minus 15,000. We did it in our previous lesson when we're doing the income statement, so that you can just find like your 1,000. Then you say that 1,000 plus the 15,000. So it will still give you the same answer, which is 16,000. So I'm going to wrap it off to the expression to confuse you here. Okay. So now if we say 20,000 minus 16,000, we get 4,000. So that is it there. And then, so let's add. This is giving us 800. This 0, 1, that's 50. And then this is 200. This is 9, so 29. This is 80,000. So now let's have the current, our current assets. So our current assets, we start with the inventory. They are written in the order of their liquidity. So starting with the least liquid inventory is the least liquid of all the assets. So we use the closing inventory, which you find in the note, 12,600. Then trade receivables. So our trade receivables, we how much? Trade receivables, 18,500. So 18,000. Then we say less provision for bad debt. So we're going to subtract provision for bad debt. So like they had told us, provision for bad debt should be maintained at 2%. So we said 2/100 times 18,500. Yeah. So that's when we got our 370, which we actually subtracted from 560. Yeah. So our the one that you're going to write in the balance sheet now is the 370. That is the current. So 370. So if we subtract here, we're going to get what? 3, then 4. So yeah, no, that's not the correct answer. So 18,500 minus 370. So it's going to be 18,130. I don't know where I got the, because 5 minus 4 is 1. I don't know where I got my figure. Okay, so 18,130 there. Then let's move on and prepayments. So we had prepaid expenses. So let's just go straight to the note. So note number 5, we had insurance prepaid 450, and I think that is the only prepayment that we have. So 450 is insurance. Then our bank Our bank is an overdraft, so we'll leave it. We'll put it under current liabilities. So now we're going to write cash 270. Cash 270. Yeah. So I think basically those are the things that we have to incorporate under the current assets. So let's add and subtract. We're just adding, not subtracting. Okay. So that is gonna be 0, and then 3 plus, that's 15. Okay, so let me just use a calculator. So 12,600 plus 18,130, that's 450 plus 270. So we get something like 31,450. So 31,450. Okay, then we are going to say less current liability. So on our current liabilities, we have current liabilities, trade payables. So our trade payables, they are 9,750. So all right, in the first column. And let's say our bank overdraft. Bank overdraft, which is 1,680. Then we have what else? Accrued expenses. So on the accrued expenses, we had loan interest and electricity. Those one on number 6. So electricity 130. Electricity 130, and then we have loan interest. So the total amount for loan interest, we calculated it in our, it was 8% of 30,000 because our loan is 30,000. So we got 2,400. So we're just going to write 2,400. So I think those are the items that we have on current liabilities. So now let's add so that we can find our total. So say 9,750 plus 1,618 plus 130 plus 2,400. So it gives us 18,960. So we are going to subtract this from 31,450. So, and then we are going to get 17,000. So 17,490. Then, so this 17,490, we're going to add it together with the 50,800. So if we say plus 50,800, so we are going to find 68,290. Then, so that is what we have so far. So now, this figure here is our, it's our working capital. That's our working capital thing. So now, let's have we'll just say also less non-current liability. So we have a non-current liability of it's an 8% bank loan. So 8% bank loan, repayable 30 June 2011. So 8% bank loan, repayable 30 June 2011. So it was how much? It was 30,000. So since I said less here, I don't need to put the amount in the bracket. So I'll just subtract. So it gives us 38,209. 38,209. That is the amount that we have. So now we'll say financed by capital. So our capital was 35,000. Net profit. Net profit. So our net profit was so much, 14,600. So if we add this two, we are going to get 49. So we say less drawing. So how much with the drawings? For the drawings are 11,310. 11 by 10. So if we subtract 0, 9, 2, then 8 is. So that's perfect. So as you can see, our balance sheet is actually balancing this amount. These two amounts are equal. They are the same. So it means that what we did was actually correct. So basically, this is our balance sheet. That is how you go about it, guys. I hope you enjoyed and you really understood what we were talking about. Thank you so much. See you in the next video. Cheers.